out for those who surround you, need no funny kind. You can't see what's on my brain, I live inside my mind. Out of space and out of sight, you need me in my line. Need no face, don't need no phonies, no, no, no. Need no snakes, no only homies down for show. On go, go, go. Get a book and get the front and we load up and roll, roll, roll. I got kids, yeah, I got staff, I make a little need more, more, more. I sell records, you sell packs, not on my level, no, no, no. I'm a pop star, I'm a rock star, I'm a winner. Think I'm not hard, you smoke rock, car waste, man, why you dumb? I'm with airline, we on airlines like we on the run. I'm with Tay, girls run up on me, they done. Money line, I'ma run it every time. Give me mine, going up, need no decline. Money line, I'ma run it every time. Give me mine, going up, need no decline. Yeah, 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 yeah. Why check Castro, yeah, I need my ass. Why check Castro, yeah, I need my money line. Why check Castro, yeah, I need my money line. Why check Castro, yeah, I need my.
Big vibes. Look, I'm about my pledge. I'm decked up on blue bills, and I won't stop until the cash pit look like fall leaves in a backfield. Tell her out of my face if she coming with that bull. Quick to say my piece, I'm so after school special. She brainy, but them jeans looking like paint. I gotta bless her. Niggas talk a whole lot, knowing damn well they really can't press us. I notated on leaflet. I'm really up a few levels with it. Like way, way out the way from them. Can't see me, you can't meddle with us. E and J in my Earl Grey hood bunched up with the cheese eggs and a dumb face. No stunner shade, still turned up. Been had it poppin' in broad day, that's Avi. Flower child from the sun rays, but I run fade, got a punch drunk. My providence, they don't love us, they rather treat us like an animal. They wonder why we on A. Escaping shit, I'm off the cannabis. Middle fingers in tandem, going tantrum. Yelling swell with a big smile, young phantom. Hi mom, I'm on camera. Coming live from the mud pit, we don't take post beat for granted. I plan to keep it stress-free, live and die young, I leave it on the canvases. Split up some with my better half, trade day like it's a holiday. My on dumb flame till the wheels kill, I'm on road rage. Yeah. On dumb flame till the wheels fall, I'm on road rage.
I've been on the run, my third eye open. Been trying to kill emotion. Life in the slums. I've been on the run, my third eye open. Yeah, yeah.
Hey, hey, f the ceiling. I've been living out the moon roof with it. I'm in tune with my senses, kill the tune with my sentence every time. Yeah, I've been in the mood, got a feeling. What we doing, got 'em fuming, they ain't used to it. Rely me to the pledge when I said it, no caps, and I'm buttered till I feel black. And I still ride for it on a couple flats. I've been down, better bounce back. Been slave to a 9 to 5, now we booming, no stopping the digital trap.
Been slave to a 9 to 5, now we booming, no stopping the digital trap.
I've been on the run, my third eye open. Been trying to kill emotion, yeah, yeah. Life in the slums. My third eye open.
Yo, gang, what's going on? What's happening? How we doing, everybody? AL, Tino Bambino, yeah? Alright, and what's good, gang? How we doing? I've come on a little bit early tonight, guys, because I've got to make a journey tomorrow very early. And I need to get a very good night's sleep. So I thought I'd quickly do the live now, catch up with you guys, and then everything's all good. Yeah, it's my voice, Johnny, man. I don't normally sound like this, bro. I'm not 60 years old. It's just my voice has been going pretty bad, so... Oh my days. It's one of them ones, yeah? If you're having a problem with the idea of... We waited for a retrace, okay? We had a retrace. We just didn't know how long it would last. Now, if you can't grasp the idea of uncertainty in this game, you will be surprised many a times. Okay? For everybody new to the channel and to all my pattern watchers, welcome to the Traders Reality channel. My name is Tino. Let's have a conversation, guys. Okay, so let's just clear something up. All right? When we say retrace, a retrace does imply price goes from one point rising and then pulls back. How much of a pullback is there? We can never know how much they pull it back. The system, or should we say the hybrid system itself, tells us that we would like to have a retrace back down to the 50. If it doesn't happen, what's next? The retrace can happen to the 13 EMA. Okay? That's exactly what's happened here. If price stops going up and goes sideways, or it doesn't go in the continued direction from the initial trend, retrace, consolidation, for whatever you want to see it as, it means it's a stop in the actual trend itself. Always wait for one, whether it's at the 5 or the 13 or the 50. Ideally, the bigger the retrace, okay, the bigger the move away from that retrace, okay? Now, what we have to understand, Bitcoin has come away from a W formation, rise up, okay? It slightly pulled back. It pulled back to the 13 EMA. Now, you've heard me probably say many a times about Ethereum. Back in the day when Ethereum broke the 1800 mark, it continued to go up and it didn't stop. We were all waiting for a retrace down to the 50 and it never happened. It was just riding the 13 EMA. All right, price kept coming back to the 13, bouncing away from it. Now, this is all on the 1 hour time frame. Okay. Now, when we wait for a retrace, we need to see the stops. We need to see the pauses in price. Why? Because then we can have ourselves an opportunity to understand where we are with the market maker. Is he marking up price? Is he getting ready to add a few more positions? Is he luring in the retail traders? What's he trying to do in that zone? If he pulls away from that zone, we've established ourselves the retrace. Okay? You have to understand, guys, this game is all about accepting that anything can happen. There are no guarantees in this game, and I can't stress it enough to you. Get used to surprises, ladies and gentlemen. You're operating in uncertainty. You don't know what is going to happen next, guaranteed. But you can build up the confluences, okay, and put things in your favor and move when the market makers move. When price starts to mark up, if we understand their buying behaviors, okay, we will understand their selling behaviors when they mark down and when they mark up. Okay? Now, the reason why I'm saying have you paid yourself is you had many opportunities to get in on this move to the upside. We've been talking so much about the 5 and the 13 EMA. And look what's happened. Textbook. Bounces up. 5 and 13 EMA crossed over the 1 hour time frame. Happy days. We know that momentum is favoring higher prices. What do we want to see from there? We want to see the 13 and the 5 and the 13 EMA, expand out. This is what we got. Wait for a retrace back to that zone. So price comes up, it retraces back to the 13 EMA, pins it, European brink session, shift out of the zone. Yeah? They brought price back into this zone that we were anticipating Bitcoin to go to, which we said a couple of nights ago in the streams. If they come back to this zone, they will need to break out with clear intention for us to not think it's a fake out to the upside to bring it back down again. I haven't addressed you all. Forgive me. I'm not myself today. Yes, Samir, I've got many scalping videos. Listen, I'm going to break it to you right now. PC Shed, what's good? Greg, what's happening? ZC, what's happening? ZDC, what's good? Just Stav, who else is in here? This too shall pass. What's happening, my friend? Yep. Okay. Let me get something right to you guys. Okay. You're watching the live at Nando's. Sack Trades, you're watching the live at Nando's. Yo, what's up, Nando's? Mad love to everyone at Nando's. Okay. Oh, wow. All right, listen. It's very simple, ladies and gentlemen. Okay? This is what we need to wait for. Okay? If price breaks below the 5 and the 13 EMA, and the 13 and the 5 cross over, the next point of interest is the 50 EMA. If on that journey to the downside, they've got liquidity to take advantage of, then they will do it. This is what we're waiting for. Guys, listen, variation on the theme. This system is not 100%. I will never claim it to be 100%. But it does improve the chances of a trade being successful if you apply it optimally. And also, you can have everything in your favor. All the confluences can work in your favor. But the trade doesn't go your way. You have to be okay with that, bruv. You know? Let's go back to poker. A pair of aces statistically beats many, many hands pre-flop. And when the flop rolls out and you've got the best pair, the opponent only needs a set or 3 of a kind to beat you. So the odds are against you in that instance. You then need to hit another out on the turn. And the more cards that are given on the board itself, the less chance of your card being hit if it doesn't hit. The same thing applies to trading. You can have the best setup. You can have the best system. Sometimes it won't work out. And that is what you have to be okay with. Because if you're not okay with that, you're going to walk into a lot of problems, bruv. And you're not going to be able to actually thrive in this business if you can't accept that any moment it can go wrong, and you have to be okay with that. We have a structure. We understand something. We know that market makers move in plain sight. Look at their patterns. You've seen this W before. You've seen what it can do. Now, when you're trying to establish when to enter, when to exit, we use moving averages. The 5 and the 13 EMA will determine volatility. They'll determine the momentum of price. Whenever price is expanded away from the moving averages, it always pulls back towards it. When is the skill? That's what we're trying to establish. The when. Because if we knew the when, guys, you wouldn't be sat in this stream. you wouldn't be even bothering with anything, because if everyone knew when the when was, no one would be talking about trading. Everyone would just be trading and just getting on with their lives. You know, what's good? Love from Norway, what's happening? This is it. System hack. If you don't know what you're not going to know, what you know about, it's all about the system and the patterns. Wow. Listen, trading is about sample size. All right? If you come to trading and you're new, all right, and you give yourself £200, $200, and you want to start trading with that amount of money, you place 2 trades, you lose your money. Would you say trading's for you? Because if you make your judgment on your ability to trade after 2 trades and you lose your money, well, you haven't given yourself a chance. Now, let's say you've been in trading for a year and you've placed many trades and you've experienced quite a bit, but you genuinely feel like there's something that is due to click, okay? Would you look at your sample size of trades after a year and say to yourself, you know what? Do I call it a day or do I dive in deeper? Because I'll tell you this, the longer you stay in the game, okay, the sooner you're going to understand it. People don't give trading a sample size. They don't give it a chance. They make their judgment on how much money they've lost and how much money they've gained. And because everybody's trying to make the money, they lose too much of it in the process. So they make their judgment on that. They don't base it on, I'll need to place a minimum of 1,000 trades. If after 1,000 trades I am down, trading may not be for me. If after 1,000 trades I've broken even, I'm going to dive in more. All right? If you're in a position where you feel like you're going to give up, okay? If it's based on monetary value, don't. All right? Because the reason why you're losing is not the money. It's your relationship with the money in trading. Which is why I say to you, focus on the execution, forget the money. Because the money is the byproduct of the success of the trade. Focus on executing right trades, okay? And then you naturally have the return in capital. That's the name of the game. Understand that things can go wrong in this game and be okay with it. If you start a business, do you automatically think you're going to have customers running through your door? No, bruv. Like, I mean, if you were to start your own business right now with a product no one knew about, even if your product was going to save people's lives or it was going to solve a problem, okay, there are costs that are incurred before you can get that product out. But why do people not see the same thing with trading? Why do not people have the same mentality when they come to trading? What, is it because so many people get involved in it and lose at the same time? There are thousands of people that go into business and they go under. It's no different. It's about the longevity. It's about what are you going to do to your mind and to the way you're going to deliver yourself in this game. Because like trading in business, there's no guarantee. One day you could be great, your product can be perfect. The next day it could go to the pan. And that's the brutality of this game. And you have to be okay with that. If you place a trade and it doesn't go in your way, you're going to put the gloves up. If you're already in denial about it and you're thinking, you know what, trading's not for me, I've been trading for the past 2 weeks and I've lost a lot of money, well, you're talking about money now. You're not in the right industry. You can't be coming to trading if you're thinking about money. At the same time, the goal is to make money. Funny paradigm, isn't it? Yeah? When we're trying to establish levels, cycles, vector candles, moving averages, these are all the byproducts of what can happen. Okay? There are thousands of indicators out there that will tell you that they will send price will go here. If it crosses here, it crosses here. Okay, go and try those indicators. Give them a decent sample size. Make your determine your judgment after 1,000, 2,000 trades. Then see if it actually works or not. But what we're using, ladies and gentlemen, is the business model. And that's an indicator that doesn't change. The business model itself It doesn't change. The patterns are repeatable. We just don't know when. The behavior of price from one point to the next is it's so repeatable, and it's visually, you can see it happen all the time, but you just don't know when. And in hindsight, hindsight's easy to talk about. Everyone likes to talk in hindsight and say price was here, now it's gone to here. But this is what I'm talking about with the hard right. This is how you become proficient. This is how you will be able to install in your mind the acceptance of uncertainty, and if it works out or it doesn't. Okay? Let's have a conversation about XRP. Okay? Look at XRP right there. So, a couple of days ago, I sent this image. Now, look at this image right here. This was XRP on the 6th, well, just after the 16th of August, okay? We understood that at some point, if this W formation held and the 5 and the 13 EMA would cross over the 50 EMA, price should end up in this zone. It would at least come back and recover this red vector candle. But in order for us to see that, we would need price to go above the 50 EMA on the 1 hour time frame. Now look where we are. There's that W formation right there. Price come up, retrace, continuation to the upside. It missed it by what? 130, 129.11. But they came back and recovered the vector candle. That image itself was, on the hourly. This is the practice that you need to get into, because now that you've got the information about how the move played out, come back down and study what happened here. Look at the end result of it. Yeah? That's the nature of the beast, ladies and gentlemen. This is the way you learn this strategy. You make a conviction and you say, right, this is what I expect from it. I expect price to go from this point to the next point. Mark it off on your chart. Have it like this, because then you've got evidence of your understanding. Okay? You've got proof. You've got feedback of you projecting a move out. Because when price was coming down here, there was no insight into understanding if they were going to bring it up here or not. To the naked eye, we were due a retrace. Well, this was the retrace when you look at it in hindsight. But when you bring it to the chart and you draw out a pattern, you then say to yourself, okay, I'm taking responsibility of this move. If this plays out purely on the principle of this stopping volume candle right here, if they bring price above the 50 EMA and the 13 and the 5 cross over the 50 EMA, then it's a good chance that price is going to continue higher from that point. Happy days. They did just that. Now I can put that in the bag. Now I can come back to this chart and say, right, let me practice. Let me train my eye to understand the confluences. What was happening on the left side of the chart? What was happening in this zone? Look at this. W formation. 1, 2, 3 hits to the low. Market makers like to do things in 3. Green vector candles to the upside. 1, 2, and 3 pushes up. Happy days. Now that they've brought price, and what have we said? When price comes up to a projection point, it always pulls back. Look what it's done. It's come up to the projection zone. It's pulled back. Now it's trying to hold above the 5 and the 13 EMA. Okay? If they bring it back down to the 50 EMA, we will then know that we're in a first level rise on this little W formation down here. We then make a decision. Okay, if they're going to continue higher, I'm going to wait and see if they're going to move price from this point, retrace continuation up. If they break down below the 50 EMA, they'll probably come down to the 200 EMA. You have to weigh up each scenario, but what you need to understand is this. You will be given enough time. That's the thing, guys. You'll be given enough time to make the decision. So if the 5 and the 13 EMA continue lower and price closes below it and continues below it as well, the next point of interest will be the 50 EMA. If they come to the 50 EMA, try and bounce away from it, but fail to close above the 5 and the 13 EMA and don't make any traction to the upside, we will then be waiting for price to break through the 50 EMA. Because what happens when price hits a 50 EMA or a moving average, always wait for the retrace. So then if they do break the 50 EMA or tap the 50, come back up and fail there, the next point is for them to bring it back down again and break through completely the 50 EMA, which then means that price will likely break through this point here in the chart. But if we are in a cyclical move to the upside, for every move they do pull away from the high, it has to hold in and around the 5 and the 13 and at least use the 50 EMA as support. So this move to the upside, if we believe it's going to be strong, we need to see what it does at this point in the chart. I agree, Esquire. 90% balls, 10% brains. That is the basis of it. Because we don't know. That's the point. We will never know. And if you're trying to get guarantees from this industry, get out of it as soon as you can. Because you're not going to get those guarantees. All right? We've got structure. We understand that there is a cycle and there is a pattern. Okay, let me bring it back to you. This is our cyclical pattern. This pattern will be evolving. It's dynamic. We understand the W formation starts at the start of the week. Well, we started this week with an M formation. So we're already thrown off. Yeah? Please, guys, try and keep it in your minds. Yes, it's great. When price is moving up, great. But we can't come away from, we can't be too excited about price rising all the time. We need to take some money and put it in our pockets. Once we've got it in our pockets, we will be waiting for the next entry point. All right? Many people are now coming into the charts and buying Bitcoin right now. And you know what? Even if Bitcoin does continue higher from this point, are you going to say to yourself, oh man, I missed out on a great trade? No, you didn't, bro. Because if you thought it was going to continue to that point up there, you would have put the house down, bro. But you don't. Because you just don't know. Now, if you want to go be bold, okay, and you just want to have a gamble, well, then that's down to you. But in this game, we're about understanding the reason as to why price is likely to move from one point to the next. What factors do we have in our favor that are going to lead price higher? Naturally, the 5 and the 13 EMA are expanded, okay? This is what we want to see. Momentum is favoring higher price. If Bitcoin pulls down and closes below the 5 and the 13 EMA in an aggressive way, so you can see how the 5 and the 13 EMA right now, let me just move this. You can see how the 5 and the 13 EMA are actually quite wide. If, hypothetically, if price was to spike down right now, okay, that would be a fake move because it's out of the norm. They are just quickly trying to take advantage of the guys who went long here, hit their stops and their liquidation points. At the same time, they are building their longs. If you want to see something similar, look at price over here. Look what they did here. Okay? They spiked up in that instance, trapped more traders, then they brought it down, then they brought price back up again, and then they stabilized, did exactly the same thing, and then they moved price up. Okay? But if you consider we'd come from a decent size to the upside, all right? We had already been rising in the meantime, so they needed to reset. In this instance, okay, we've been coming down anyway, and they've shown intention. Now they're moving higher. They've taken the previous peak that we went to beforehand, which is what we wanted to see. So now we're waiting for them to show their hand. So if we bring it over to the actual chart itself on Bitcoin here, we'll have a look at the liquidity chart. Look what's been going on. We are now approaching the next pool of liquidity, ladies and gentlemen. Now, what have I said to you many, many, many times? What is the importance of the range daily high? Hey? What is the importance of the range daily high? There you go. My guy said it. Pull back. Yep. Price always pulls back. Look at what it's done. Range daily high. Pins it. Pulls it straight back. But it pulls it back. Just because it pulled back to this point right here and now it's coming back up. The principle is there. It pulled it back. Now the next pool of liquidity, ladies and gentlemen, is at the 49,400. up to the 49,960, which leads us onto the 50k zone. If we look on the 4-hour time frame, we will see something very interesting. That'll go across. I mean, that's going to take absolutely forever if I do that. Here we are, all the way over here. And if I zoom in, this is the next pull. We're coming up to this zone right here. Inside here are vector candles on the hourly. Okay. I ain't going to go to the effort of actually doing that. Actually, you know what? Should I? Here we are in that zone right there. And you dive even deeper, you'll see more vector candles. Look at all these vector candles up here. Building longs at lower prices, shifting back up. Okay. This is where we expect price to go. This weekend, we might just see a nice little move, another move to the upside. Okay? But be cautious. Use the 5 and the 13 EMA to establish the momentum. They do need to pull it back sometimes. Alright? Crypto Jesus, that is a strategy people actually play on, you know? There are guys that just wait for the range daily high to be hit and then they literally go short from that point, or the range daily low, they literally wait for that point to hit and then they go long. Right? Ethereum. There you go. Ethereum right there. Holds the 5 and the 13 EMA. If you go back and watch this week's streams, we've been talking about the 5 and the 13 EMA with numerous examples of what we need to see in order for price to continue from the pullbacks to the 5 and the 13 EMA. Okay? I can't stress it enough to you guys. The 5 and 13 EMA will give you the momentum. It will give you the intention by the market in the sense of the volatility behind price. All right? And if you can just pay attention to that and monitor that, then there's a good chance that you're not going to get caught out in crazy moves where retail traders are stepping in, but you're actually holding back because you need confirmation. Okay? So to summarize that, if you're waiting for if you're waiting to effectively make a position, all right, look at where price is. Where has it come from? All right? 2, if you're going to use the 5 and the 13 EMA, when they contract, which is what's happened right now, you need to see price moving higher, taking out the previous zone, and the 5 and the 13 EMA actually expanding to employ that momentum is stepping in. All right? If, on the other hand, you are waiting to see if they're going to break down, if you believe that they are due a deeper retrace, because now we're going into the weekend, it's going to get a bit crazy. There's light volume, but a lot of volatility. Now, when I say light volume, it means that the 9 to 5 banking people, traders all over the world, okay? You know, it's the weekend. They don't have access to the banks anymore. Now, of course, we do have online banking, but I'm talking day-to-day banking, 9 to 5, Monday to Friday. They're all closed now. Institutional traders are at home. They're not in Wall Street, for the better word, okay? And that's the same in the UK. Go to Canary Wharf right now, it's dead. None of the people are walking in and out of Canada Square. Red Canada Square, sorry. Now, Ethereum. If the 5 and the 13 EMA continue, you want to see the expansion of that, okay? If they decide to start breaking down, wait until price does the following. Watch this. Imagine 5 EMA starting like this, and then it turns down, okay? Then wait for the 13 EMA to do the same thing. Price would effectively be here, okay? That's where price would be. Price would then do the following. From this point, it will come down, come back up, failing to close above the peak, the last peak of the 5 EMA. All right? If it fails to close above the peak of the 5 EMA, the last peak of it, then there's a good chance that momentum is going to continue to bring price down lower. When it goes down lower, wait until the 50 EMA effectively matches up towards this zone. If it comes to that point in the chart, ladies and gentlemen, all right, wait to see if price is going to actually balance off in that zone. All right. It might induce a nice sharp move up, but then it may be short-lived and they may bring it back down and break through the 50 EMA, because in this instance right here, they're convincing the retail trader to buy the dip. All right. Now, let's assume they do that. They move price higher and they bring it down. Once it breaks the 50 EMA, wait until it can come back down and retest it. Here's proof of that. Look at this. Look at this zone right here. Okay? Let me just get rid of this. So, price comes up. 5 and 13 EMA right here. Okay? They break down. They pull it down. This tries to come up. It fails. Right? Price is nowhere near the last peak of the 5 EMA. So you know that momentum is now favoring lower prices. They break down. 50 EMA is going down. So price drops. Okay? You want to test the strength of this move to the downside. Is it going to continue? Because you may have missed this move. So look what happens. They bring price back up to the 50 EMA to test it. They fail it. They drop it down again. Are we on the same page, ladies and gentlemen? Are we all on the same page? Alright, and cool. Cool. If you add the volume to your watch list on TradingView, you'll see now the volume of XRP per is 1.8 billion, while Bitcoins is only 350k. Algo is 38 million. Well, what can I say to you about that? Something's happening. So it's like in light of fractional disparity. See that sort of information. Guys, remember, okay? Let me explain something to you. I'm applying Forex concepts to cryptocurrency. These patterns, right? These market cycles, these sessions are based on Forex. Okay? I decided to take the plunge and think, is it possible for me to apply this information in cryptocurrency back in January the 21st, when I first streamed while I was waiting for my tea to brew. I was stood in my kitchen and I was vaping away, and I thought, you know what? Let's go live on YouTube and just break down a couple of charts. Let's see if people think I'm an absolute nut job. 350 people later, I thought, okay, people, they're trying to understand something. I'll go on again and again and again and again. And as time passed, it seemed like the hybrid system itself was very adaptable, which then it solidified to me that the only thing that is different about cryptocurrency and Forex, okay, is Forex has been around longer. Forex trades $6.5 trillion per day. Okay? Cryptocurrency is shy nearing to 2 trillion mark plus. And everyone's like so over the moon about it. Wait till cryptocurrency gets into the same category as Forex. Because it will. Trust me. Cryptocurrency will be daily turning over that sort of money. We're in the adoptive stages, ladies and gentlemen. All right? And once more money comes into it, boy, you're going to just be seeing the same thing over and over again. I'm telling you now. Nut job's changing my life. You know. I'm reading your comments, man. That's crazy. All right, then. Let's have a look at XRP for a short moment. Okay? Just be mindful, guys. The hype across the board is everyone is positive now about cryptocurrency. Okay? But let's just understand something. With the exception of XRP, Bitcoin right now is only at the previous point when everybody was nearly crying their eyes out. Right? When Bitcoin came back down towards 48K, everyone was like, oh my God, oh my God. Now everyone's in this euphoric state. Isn't it funny how directional bias, okay, has such an impact on people? It's in exactly the same spot as it was before, but the mentality and the sentiment is different. It's crazy, isn't it? You cannot have a directional bias. Pay yourself. There will always be another opportunity for you to step in. Because if you understand the way they move price, you will know they need to bring it down for them to bring it back up. Market maker isn't going to be doing what the moon boy does and buy when it's at its highs. Look up here. Okay? I'll make it fitting for you. Look at this. Right? Someone went long up here. Poor unfortunate souls. All right? And that's because someone said that last night and I thought that was really funny, so I thought I'd introduce that again. But someone went long. In order for someone to go long here, someone needed to go short. And look what's happened. It's pulled it back. Now it's continued back up. Soul needs to break this zone right here clearly for us to convict that it's going to go higher. Ada, look at this monster right here. Right? This absolute monster. $2.46. Yesterday we were down here. And we were waiting for the move up if it took out this previous zone right here. Happy days, up it went. Alright? Still holding the 5 and the 13 EMA. Now this is what I'm saying. Alright? Look at this. Look how price has now come down below the 5 and the 13 EMA. But then the next candle has brought it all the way back up again. Now, if you were in a position, if you were in a long position here, okay, naturally, if you saw it break down below the 5 and the 13 EMA, you could have been a little bit more, I would say, a little bit more impulsive, and you probably would have closed at this point because you would have been leaving dead money on the table, okay? If you closed your trade at this point, and then you saw price coming back up right there, don't kick yourself, all right? Do not kick yourself because you paid yourself good. Wait for the next movement. Because if they are going to move price higher, all right, wait for the 5 and the 13 EMA to expand. Now, how long they will stay expanded for is a different story. This is the nature of this game. You pay to play. If you've got a belief about something or a conviction, or you can see that a number of confluences are coming into favor, take the trade. You pay to play in this industry, ladies and gentlemen. You will know when you've paid. All right? Now, you can sit back and say, I hypothetically would go long here. Okay? And let's see what happens from that point. Okay? If you go long from this point right here, right? And price drops. Well, how much money are you prepared to lose to say that you are wrong? Because even if things are stacked up to the upside, okay, how long are they going to maintain that logic? They stopped right here. They've pulled it back. They haven't come anywhere near the 50 EMA. And now they're pulling back up again. Drop up to a new time frame. Look how far we are away from the 50 EMA on the 4 hourly. That's a little bit scary, isn't it? Things tend to get put into perspective right there. Come along onto the daily time frame. Boy, that's another story, ladies and gentlemen. All right? But we are operating at all-time highs. So when we're at all-time highs, guys, the only thing that we have in sight is the previous candle to the one after. Right? All we have is this. That didn't make sense. All we have is this one candle here and the 5 EMA. If price comes down to the 5 EMA and bounces from there, it's on you to make the decision as to whether you place the trade or not. But price is moving higher. Market makers step in when price starts to show notable candles above key certain points. Remember, what better time to go short in the eyes of the market maker when he's trapped enough traders to go to the upside? Now, that's not to say you go short in this zone. No, because this may be the smaller part of a bigger move. If you're wanting to understand where you are with price in terms of cycles, use the moving averages. Use the moving averages and establish momentum. They've brought price back down now. What are the chances of them moving it higher? Well, wait to see if the 5 and the 13 EMA expand. If price just goes zigzag over to the chart, right? Then all of a sudden it just spikes up. That would be a fake move. Look over here. Look what happened with Bitcoin over here. Where is it? Yeah, this move here. Comes up, starts going sideways, spike up, then goes sideways again. One last hit, drops. All right? Yeah, price discovery is risky. You know? It is very risky. Is this USD move to the upside legit? Also 13-minute crossing. Well, today we did say that dollar yen was going to range in the Patreons. I told them today, this morning, that dollar yen was likely to range out. Let's have a look. There it is right there. Pretty much stuck in a boring range. Okay? At the same time, gold has done exactly the same. So that tells me one thing. They're moving minor currency pairs. In light of fractional disparity, they're holding the majors and moving the minors. So all the other exotics like, where is it? You know, your Euro Swiss, GBP, Kiwi, you know, all the lower currency pairs, the lower minor crosses, all right? Majors will be Euro USD, dollar yen, Aussie dollar. So if they're holding the majors and moving the minors, next week we will know if they're going to continue with the majors. All right. Let's see how we finished for the week. We nearly hit the highest point for the week, guys. Okay. We haven't finished the week. The week finishes on Sunday night for cryptocurrency. It starts, a new week starts there. All right. Saturday, sorry. For this broker that I've got here. All right. We may come up towards the range weekly high, which could take us towards the 51 zone. All right? They mean business today, guys. And they are coming up fast. If we look at the vector candles right here, you can see that we've got this zone right here, which on the liquidity chart itself is over here. This zone up here. All right? Right, let's have a look here. Joe Chatfield, how you doing, bro? Right, Joe's asked the question: how do you determine when to take, when to take profit and when to hold? I was hoping to try cash out at the end of a bull run, whenever that may be. Thanks for your input. No worries, bro. Okay, listen. 95% of the problem that traders have in this game is trying to establish a profit. If you're in a profit, my friend, take it. Simple as. Do not take every trade and hope you're going to hit the house. Right? Stop aiming for home runs. Why is there so much importance on getting to the first base? Right? Why is there such a massive importance in baseball to land on the first base? Home runs, okay. They're great. They make life easier. But if you haven't filled your bases, a home run is pointless. Get to the base. Pay yourself. Base 1, you've paid yourself. Now you've got more capital. Now you can put down a bit more size if you feel comfortable about it. That means you can hold the trade for less time and earn more money. The idea of this hybrid strategy, ladies and gentlemen, is to be able to get so proficient at it that you can put down a very decent sized amount of money and be in the trade for such a small amount of time and make the fattest return. What it takes a swing trader to earn in a week, a scalper can earn in 3 moves in 1 day. That's the goal. You know? If you look at how institutional traders trade, remember, they're using size, right? There is a video on YouTube talking about day traders. And it starts off with this guy in Japan when he was getting ready to trade the currencies. And the reporter was following him and he was talking, about how does he go about his day. And he, takes him to the office and he starts talking to all the other guys. And he talks him through a live trade. This guy picks up the phone, speaks to someone, looks at his chart, puts in a couple of figures, waits a couple of minutes, literally a couple of minutes, puts the phone down, presses a button, turns to the camera and said, just made 25,000. Just like that. And that's what institutional traders do. They are forever in and out of positions. They're putting down size, bruv. You know, they're not doing this, I'm going to hold from this point and go all the way up here. Nah. They're putting like 10, 20 million in a position and they're waiting for the smallest movement, back it out, take it out again, do it again, do it several times a day. That's why when you hear about traders are making, like these institutional traders that are making millions, hundreds of millions a day, because they've got hundreds of guys doing that same transaction over and over again, each firm. Scalping is what the market makers do. Their approach is in and out, in and out. They are fulfilling orders for people. When you buy, they sell. And they do it thousands of times. They provide the liquidity for it. Scalping may not be for certain people, but that's the nature of the beast. The problem with swing trading is you're leaving your capital exposed for a long period of time. That's the beef with swing trading. Tim Westwood, you know. What a guy. Nah, I ain't that guy, man. I ain't that guy. But he's funny. You know? Yeah, but crypto moves, it's true. 2% is 2%. It's what you understand 2% to be. Alright? Daniel. Well, market makers are in and out. Institutions stay in trades for months. They literally cannot scalp with the amount of money they are using. Yes, Daniel, of course. There is different people. You have to understand something. Market makers have algorithms that fulfill orders. They are deemed as high-frequency traders. Okay? They are executing thousands and thousands of trades. Every trade that they are matching as a liquidity provider, they're setting up their own trades as well. Yes, institutional traders do hold trades for long periods of times. But they do have institutional traders that do scalp. Remember, I'm talking about Forex. Right? A 6.5 trillion daily turnover market. Yeah? Of course they're using size. How is it able to turn over that much money in a day? Oh my God. Yeah, I went to... No, I didn't go to school about this, bro. 11 years just trading this market, man. Just Forex. Long time. Day in, day out. Non-stop. Had charts up everywhere. But I enjoy it. 15 years. The whole journey was 15 years. From the day I picked up the first book to understand about trading was 15 years ago. You know? And continuously for 11 years. Trading back and forth. Back and forth. 11 years straight. It has been a graft, I'll tell you that. Have I wanted to quit? Many a times. But I love the game. The game. The game of trading. The hunt. Kept putting me back in because I knew it was my fault. Anything I did was my fault. And I spent a long time blaming the market. And it was when I realized that the market had nothing to do with it. It was when I realized that the market doesn't know me. When you accept that the market doesn't care about you and doesn't know you, you'll learn not to blame it. You're not going to blame someone for something they haven't done. Are you? Can you blame someone for something that they've not done? You can't. If they don't even know you, why are you blaming them? If they haven't done anything to you, why are you blaming them? If you put your money here and it ends up going down here, that's your fault, bruv. The market was going to go in that direction. You just called it wrong. And for me, that's what I did for a long time. You know? What's going on, Brazil? All right, and let's have a look at some altcoins, man. Let's see what's been going on across the board. Sol. Well, we've seen Sol. It's going to get a bit quiet now in the marketplace. SRM. Holding. Fulfilled the pattern. Happy days. Raven coin. Quite choppy behavior. SXP. Let me just get the big winners today. Ava. Look at that. 2 days ago. What did we say? These were the points in the chart. And they've hit every single one of them. We look left. We will see the previous pools of liquidity. Happy days. Happy days, happy days, happy days. Now look at it. Sat at the next pool of liquidity right there. 36,948. That's where it's at. Alpha. Let's have a look at Alpha. Wow. Alpha coming up, fulfilling the previous pool of liquidity right there. Now, Alpha needs to break above this area right here before we can deem anything. The 5 and the 13 EMA are very extended, but price is still above it. Naturally, we will want to see a retrace back down. When will that retrace start? Is down to when they decide to do it. Okay? If you're going to get caught up and feel like you're missing out on a move to the upside, you've missed the move already. Naturally, you shouldn't want to step in right now. Let the retail trader do that. Let the retail trader be the guy that provides the liquidity for you for when you decide to go short. All right? Corey, 100%, bruv. 100% Corey. Corey Luand. I can't even say your name, bro. 100%. Cake. Let's have a look at Cake. Cake has done very well today. Although Cake is now halfway above towards its all-time high, still got a lot of ground to cover. BNB, wonderful, eh? Good old BNB, taking a battering. Matic, tried to come up and finalize that zone. We said it would likely come up to the M4 pivot point. That's perfect. People are throwing in a couple of coins right now. I just looked at Algo, actually. Algo's doing very well. Algo's doing well. See, when you see this sort of behavior right here, this is what you want to see, right? When you see the red vector candle appearing, all right, at the highs and fails to break down lower, we understand this as a point in the market where the market makers are building longs. So they quickly got some longs in this zone, and look at the candle now recovering back up, all right? If they're consistent with this, okay, if we have made the right conviction that they are building longs in this point, they are naturally going to favor higher prices. We can project that the next zone would be the M5 pivot. Now, ladies and gentlemen, you are left with something, okay? You are left with the decision as to whether or not you say to yourself, do I go in or not? Is it too much of a risky trade for you? That's on you guys. Do you want to wait for a full retrace? Do you trust this move? That's what I'm trying to say to you. That's the anatomy of how to understand when to place a trade, given the circumstances that you may think that you've missed out on the move to the upside. Are you waiting for some more consolidation? They've already been consolidating. Okay? And we will always have this battle with our minds about what constitutes a trade or not. That's part of the game, guys. Sometimes you just have to bite the bullet and say, you know what? I'm happy to lose X amount. I will make the commitment and do what I need to do. If it doesn't work out, I know I would lose $200, for example. Happy days. I paid $200 to understand that I was wrong. Better than you just taking a trade out of your own nature and then hoping that it goes your way, and then you hold on to that hope and price is dropping and dropping and you're burning money. That $200 that you should have closed at has now ended up being $700 loss because you were too convinced that you had the favor to the upside. Or some guy on YouTube said so. I'll give you the framework, ladies and gentlemen. I will show you what needs to be understood. We learn in real time. I can easily talk to you about it in hindsight. You'd get bored of it. You really would. You wouldn't spend 5 minutes in this place. In real time, it's a different story because you're learning and applying it in real time. At least you guys have got the benefit of knowing what to look at. I spent too many years looking at the wrong thing. If you think there's a lot of content that you need to go through in this channel, you're having a laugh, bruv. Yep, there is thousands of hours, well, over 1,000 hours worth of streams on here. I'm not saying for you to watch them all. At minimum, go back and watch the last week's stream. Because this move to the upside, we would understand how it could have developed into that move. Because we repeat things. Because they only do repeatable patterns. Nothing changes in this game. We just don't know when. Neil, how to get out of the recovery desperate mode inside the mind? Recovery desperate mode. Recovery desperate mode. When you say recovery desperate mode, what do you mean, bruv? Joe Chatfield, mad love to you, bro. Look, guys, this is my passion. This is my life. Okay, I don't care what anyone says. I will always be doing this. All right. When I stream, it's me getting more information about the charts. Okay. That's what I do. I traded dollar yen for 6 years straight. I didn't look at nothing else. I needed to understand the concept of, rather than being a jack of all trades, master of none, I said to myself, I want to pick one currency pair and study it. And that's exactly what I did. That's why I only trade now dollar yen. That's all I care about, just dollar yen. I know her inside out, and every single day I'm learning more about her. Okay? With cryptocurrency, everything seems to follow Bitcoin. That's why I make a lot of reference to Bitcoin. Ethereum, in my opinion, it technically is a better currency, cryptocurrency to trade because it respects levels well. But everything is based on Bitcoin. All right? It's the basis. It's the fashionable coin. Now we've got this fractional disparity between the big major crypto coins, XRP, Ethereum, Bitcoin. And then we've got all the altcoins. See, in Forex, you only have the currency pairs, and then you've got gold. When investors are scared, they put their money in gold. Someone even put an article out about Bitcoin saying that those who have been buying Bitcoin are going to start buying gold instead. They're trying to bring back the standard. Mark Douglas, yes. I do dabble my hands. I do trade. I do place trades. I like a few scalps. I do as many as I can. You know? Tell you about AVAX. Okay. Well, let's have a conversation about AVAX. Right. Something you need to understand here. Right? Pay attention to the altcoins that are performing now when Bitcoin is not. Okay? So if Bitcoin's not really moving up, right? And Ethereum at the same token is not really doing much, pay attention to the coins that are doing the business now. All right? Because when Bitcoin and Ethereum start moving, you're going to see these ones most likely to continue with their move. All right? Here's an example of the 5 and the 13 EMA. All right? They've cleared the zone. Notable volume has stepped in. 5 and 13 EMA are expanding. All right? That's on the hourly. Go on to the 15-minute time frame and look at where you are in relation to the 50 EMA. The 50 EMA is now edging upwards. The 5 and the 13 EMA on the 15-minute time frame are now expanding up. Okay? Now we're going to see how far this move is going to go. If you were to make a decision to enter on before this move would happen, okay, you would have said to yourself, if the 50 EMA holds, what proof would I have to consult to agree that I should go long in this area? So look at this. Drop down to the 5-minute time frame. Okay, look at that. 5-minute time frame shows you these two red vector candles coming to try and break down lower, but the stopping volume candle comes in. Price comes up, comes back down, doesn't go lower, holds within the vector candle. What do you see? A very small W formation. Now, small W's, bigger W's, naturally a small W formation can lead to a smaller move. But look what's happened. If you were to simply go long on the basis of the 5 and the 13 EMA, is price above it? Correct. Is now price above the 50 EMA? Correct. You would have gone long in this area right here. That would have been your criteria to go long. So again, let me explain it to you. This is on the 5-minute time frame. Price has come down below the 50 EMA. We understand when price deviates away from the moving average, naturally it has to revert back towards it. Look at the volatility of price. Market makers are stepping in. Red vector candle implies that they are buying, but they are inducing the shorts to go down. Off it goes. They spike lower. The next candle traps the retail trader one more time. Look at the wick, because this green vector candle was originally a red candle to the downside. Okay, they brought it back up, stopping volume. They bring price back into the fray. 50 EMA comes up to as a point of resistance for the guys who initially went short here. They add more shorts in this area. Price pulls back. In this area right here, the market maker makes the retail trader think that it's going to continue lower, but it doesn't go lower than the first leg. They then hit the stops and bring price back up again. If we drop down a lower point in the time frame, look at what happened. The same behavior happens again. Red vector candle, 1, 2, 3. They induce the traders to go lower, then they hold price. Price shows an inverted 5 EMA, shark fin on the EMAs right there. Blue vector candle solidifies the return of this red vector candle up here. They're moving price higher. Go back to the 5 EMA. You've got this green vector candle confirming that they favor higher prices. Okay? As long as price stays above the 5 and the 13 EMA, you are good to go long in this zone. Your stop would have been below this vector candle right here. You take your entry here at the close of the candle, right there, and you would have put your stop right here. There's your exposure. That's a pretty accurate candle, and that is a pretty accurate entry on the 5-minute time frame, guys. There are guys that will probably go long here, and they'll put a stop on the 4-hour time frame, and they'll say, okay, I'll wait for it to go down here to put my stop. You don't want to sit through that drawdown, because price will then end up coming all the way back down. You would see your entry and you'll be like, yeah, well, that's where my stop is right here. It's not going to go down to that point anyway. And then before you know it, price comes down to that point. That's how people are, man. Can't change that. So, ladies and gentlemen, I'm going to end the stream. Okay, but I want to thank you all for passing through. Be sure to like and subscribe. Okay, we're just finalizing the week. Be careful, it's the weekend, guys. All right, guess what? You can start again next week. All right, you can actually start again next week. You know, the longer you expose yourself to this game and the longer you spend paying yourself, the more fruitful this game is going to be. It's as simple as that. People try to get to a point of profit. Don't question that which you had no idea you were going to make. Just because you're in profit now, why are you questioning it, bro? Pay yourself, man. You've just understood something. Take the money. Do it again. Because you do it once, you do it twice, then 3 times, you start to think, you know, you're getting a little bit of confidence. Confidence does help in trading. Because if you don't have confidence in your ability to trade, you're not going to make a penny, bro. You're going to be the guy that comes to the chart and says, right, I think I'm going to go long here and let's see where it goes. You wake up next day, you see it completely blows your entry point. You're like, you know what? I would have gone long there, man. I drew my line there, man. Yeah, man, I should have gone in there. Well, hindsight is like that, man. And you ain't going to learn nothing on hindsight. Bring yourself to get some feedback on the way you behave in this game. This is the hardest, easiest way to make money, guys. That I promise you. Go have yourselves a wonderful evening, guys. Make sure you reach out to us on the socials, Twitter, Instagram, you name it. All right? Patrons, I'm going to send you a video very shortly. I'm just going to get myself a little drink. All right? Mad love and respect to all of you. Have a wonderful weekend. All right? And enjoy the fruits of your labor, guys. Enjoy the fruits. Don't get caught up in the weekend. As tempting as it is. All right? Mad love and respect to you guys. Take care of yourself. And I will see you next week. Mad love. Peace.